A very good afternoon to everybody. A good evening, early good evening to those watching from India and any other friends in any other time zones. Greetings to you. On this glorious day, the sun is shining, thankfully for us in London. Sun is still shining, but it's a good reminder for us to be conscious of the world around us as we worry about how we're looking, a happy Earth Day, if I may say so. Although the way that we've treated our Earth, ourselves, our neighbors, our friends, isn't something that we can be proud of over the years. So what exactly are we doing today? We're talking about environment, social responsibility. We're talking about corporate governance today. This very complicated, moniker that we call ESG, which has become nothing less than a buzzword today. On behalf of the Confederation of Indian Industry and MyyTake, I'd like to welcome you all to a very, very valuable, very, very reflective conversation today that we're kicking off at this roundtable that is themed Understanding Environmental, Social and Governance Landscape in India, its context and its consequences. I'm going to be joined by Srinath, who is the chief mentor at MyyTake, who is going to be discussing a number of issues around not just helping us understand what is the ESG landscape in India. Hi, Srinath, welcome. But also understanding what it means for industry, what it means to the various stakeholders. And I'm delighted that we are joined by participants young and old, although calling somebody old is not very pleasant. So people young at heart and young by age. We're all in it together. We're all concerned about how we are living, breathing, and surviving. And through the pandemic, I think the one thing that we have learned is to survive. Our resilience, our intrinsic and extrinsic, resilience is not just a factor of our own survival, but if we together, are conscious of what the others are going through, then we will all survive together, and then we will be able to look after this planet. In schools around the UK, I'm sure around the world today, children are being taught how to love your planet, how to be responsible, how to be caring and compassionate. I dropped off my niece in the morning and said to her, listen, it's Earth Day today. And then she said, what does Earth Day mean? And I thought to myself, what does it mean? So Srinath, I won't answer that question. I'll let our very, very eminent panelists who are experts in dealing with issues around the environment, around the social responsibility, around corporate governance to respond to this question. This very innocent question that our young people who are listening to us are curious to know. And I'm actually curious to know because I'm young at heart. I want to know what does Earth Day mean to us today? What does ESG mean? How does it translate to our, governance? How is it linked with the social responsibility? Why ESG together, in the first place? So without delaying further, I'd like to thank each one of you for joining us today. Please stay with us through the conversations. There will be an opportunity to participate by way of your questions. Please feel free to send them via the questions in the comments box. Our eminent set of panelists, I'd like to just call out their names, and Srinath will obviously be inviting them later for a panel discussion after he's helped us understand the context. It's Mr. Shailesh Haribhakti, who is the chairman of Shailesh Haribhakti and Associates. Welcome, Shailesh. Mr. E. Balasubramanian, called Bala very endearingly, who is the MD and CEO of Aditya Birla Sun Life AMC Limited. My colleague, Mr. Shikhar Jain, who's a principal counselor at CII's Center for Excellence of Sustainable Development. And finally, Tanya Kumar, also my colleague, principal policy advisor with the Confederation of British Industry, bringing in the UK lens for our conversation. Without further ado, I'd like to pass it on to Srinath. Please help us understand what we are doing today and what this whole conversation is about. Thank you. Over to you, Srinath.
Thank you, Lakshmi. So I think it's fair to start off with saying good evening, India, and good afternoon, UK. It's a delight to welcome the panelists that we have today. Each of them are experts in the conversation that we're going to have, be it the environment or the societal impact or governance aspect. And the context to this entire conversation is this. One of the points that we have had almost to the point of accusation by the younger generation is the climate change topic took us many, many years before the world actually started acting on it, and still we have some sense of disbelief. So is this conversation about ESG very, very similar to climate change? Is it one of those buzzwords that corporates use to gather more investments, or is it actually a real thing? And it'll be very interesting to have some of these perspectives, because we have people who cover not just the finance world, but policy world, political world, everybody on this panel today. And we also very interestingly have, as Lakshmi pointed out, the young at heart and young at age stakeholders here. The millennials and the Generation Z are seen as very passionate to their causes. And what does it mean to corporate world, not just in India and UK, but rest of the world as well? What are those learnings? How do you attract such talent if you do not possess good governance, if you do not stand for some of these passionate causes that ESG propounds? And also, it will be interesting to learn as we speak. I mean, this is the time that COP26 meeting is going to happen, and we have seen UK has legislated the net zero target. So what are those learnings? Is there some learnings that we can bring from the public policies around the world for India? Recently, SEBI has also announced, mandated that the top listed entities have to disclose their ESG measurement. And it'll be interesting to hear our experts here talk about, are some of these just mere rhetoric because regulators ask the corporates to do, or actually are the corporates doing enough? And what more can we do? So without much ado, before I invite the panelists, I just want to leave a thought, and would be happy to hear their views. Does goodness really pay? And we believe that ESG is all about goodness, and that's what this conversation is all about. Can I request Mr. Haribhakti to address the gathering, please?
Thank you very much, Srinath. What a fantastic day we are meeting on, Earth's Day. Happy Earth's Day to everybody who is on this webcast and to the entire world. Lakshmi asked a very pertinent question. What does Earth Day mean to me and to all of us? What should it mean to all of us? To me, it means love for our only home, planet Earth. And I think this entire conversation really should focus around that idea of how can we show our respect, our love, our commitment, our stewardship towards our only home, planet Earth. What has happened over the last 1 year is absolutely remarkable. And Srinath, yes, ESG has come to mean goodness, has come to mean what are the actions that all of us, as corporates, as individual citizens, as people who can influence policy, who can talk, who can bring ideas to the table, what should all of us be doing to make sure that the world begins to believe that the total focus that everybody had on shareholder value creation is a thing of the past. And we now have to focus on the interests of every stakeholder. The key concept that has emerged over the last 1 year is that we have to earn, maintain, curate, enhance our license to be alive in society as a productive organization, as a productive person. All of us have got that license at every level. And what it means is we should redeem the promise of that license, which is that we strive to make whatever we have got in our custodianship a better place to be in. Things have happened dramatically over the last 15 months. Two very major organizations, the GRI and the SASB, have decided to merge. The Value Reporting Foundation has come into existence. And I just heard this afternoon that Mr. Michael Bloomberg and Judge Mervyn King are the co-chairpersons of the Value Reporting Foundation. Now, this is an extraordinary convergence and coming together of all the standard setters who had, in a way, created a fair amount of lack of certainty about what should we actually do, what should we report, what action has what kind of meaning, measurement. But all of these things will now get consolidated, will converge, will become global. Simultaneously, by the end of this year, actually in November, we will have the establishment of the Sustainability Standard Boards, which I believe will operate from London, Lakshmi, as part of the International Accounting Standards Board. And what the Sustainability Standards Board is going to do is to give us a common set of standards across the globe as to what should be reported, in what manner, and how should we deal with the various capitals that have now become the subject matter of all our thinking. It is no longer enough for anybody to think just of the financial capital. That's now pretty well known, pretty well worn. What we now have to think about is truly integrated thinking. How are we bringing the 6 capitals of human capital, environmental capital, physical capital, reputational capital, innovation capital, and financial capital together? What is it that we can choose based on materiality that fastens itself upon our existence, about our corporation, that we choose as a set of actions? So should we focus on energy transition? Should we focus on social responsibility? Should we focus on safety? Should we focus on diversity, inclusiveness, equity? Should we focus on purposeful governance? There are a whole lot of areas from which to choose. But having chosen it, we now have, through the World Economic Forum and the interaction of the World Economic Forum's Business Council with the big 4 firms, a whole 21 set of principles which will drive measurement. Of course, these will be reshaped, refashioned, and brought to global standards by the Sustainability Standards Board and the work of the Value Reporting Foundation. But we now have a starting point, and we now have true and deep meaning being assigned to environmental stewardship, social responsibility, and purposeful governance. And I'm seeing, as I go through the latest set of board meetings at the 7 listed companies on whose board I serve, I'm seeing a genuine appreciation for why it has become important as a strategic imperative for these corporations to engage with this subject, to take leadership, to make sure that actions are chosen such that they have a maximal impact on society to help us to earn our license. And what is it that we can do to set the example for industry to follow? And what will it do to get our stock re-rated in the minds of investors, not just the current investors, but future investors who will be thinking of investing in us? And as was mentioned several times by both Lakshmi and Srinath, we have to attract the best talent to work for our corporations. And nobody is going to come and work for a company which does not have a soul, which does not have the consciousness about these factors. Indeed, if you look at the risk management processes of all these companies, they are now being informed dramatically and much more importantly by factors surrounding ESG. Because the opportunities that we choose have to now have a focus of gross zero. It would be very difficult for boards to actually engage and get a capital allocation done for activities which are likely to increase the carbon footprint of the company. In fact, almost every company now is in a race, and in a genuine race, to actually get to net zero first, making the commitment, then telling people what they want to do or are about to do about it, and then prove that they are actually doing it. So all of these three activities, owning it, implementing it, proving that what you're doing is having the impact, are becoming a full-fledged board level discussion. And this is very significant. Almost every one of the 7 boards has renamed their CSR committee into a CSR and sustainability committee. And my prediction is that very soon, sustainability issues will become such an integral part of strategic planning that we will not need to have, it will be owned by the CEO, and it will enter into the DNA of almost every corporation. And so, from every point of view, every stakeholder is demanding that we get real, goodness pays, it increases value, it creates an opportunity for young people to engage and work with the good corporations. And all in all, we can look forward to a future where we can define what we did between 2 Earth days. Thank you very much.
Thank you so much. That was wonderful, and I like the some of the key words that you have mentioned. So, soul for the society. I think it's soul words that we have, and I'll come back to you when we do the interjections. And thank you so much. Can I ask Tanya to come in with her opening remarks, please? And Tanya, just to set the context, it would be interesting if you share some of your experiences in the UK corridor, especially the public policy making framework around ESG, and how are those measurements being done? Thank you.
Thank you very much. I'm calling here from the UK, where it is bright and sunny, and I want to send my best wishes to everybody, whoever you are on the call, wherever you are in the world, that I hope you are staying safe and well in these times. And just to pick up on some of the comments that have just been already made, despite the fact of the last, the 15 months, 18 months whilst we've been in the pandemic, there has never been a more important time for us to be talking about sustainability and net zero, climate change, what it means to us and our economies across the world. The pandemic has shown just how fragile the world can be, but also the importance of the collective, whether it be people, society, business, governments coming together to tackle these global challenges. And of course, climate change is one of the key challenges that is going to impact us for decades to come. And that's why Earth Day today is so important to all of us, and for all of us coming together, particularly across industry, across the world, but also across generations. And I think I'm speaking here today as part of the younger generation, for whom all of us will have to deal with all of these issues that are so prevalent around all of us. And that is why it's so important for us to be key stakeholders in these discussions. We cannot close our eyes to what is happening, because it will be us that will have to face the consequences. So we must come up also with the solutions. So when we're thinking about the importance of resilience, what is the role of business within this? And speaking on behalf of the Confederation of British Industry, who are the largest lobbying group for UK business in the UK, we have seen such a growing importance of business in these discussions. Why is business so important? Well, it's the long-term thinking that businesses can bring to the table. Businesses often outlast changes in government, so they have such a key important stake in all of this. But also they need to attract investment, so they are held to account not only by investors but also people in the products and services that they are producing. And actually the consumers like ourselves, we are voting every day by the way that we spend what's in our purse. And then obviously that powerful representative role that businesses play on a global platform, actually in a global environment, trading with one another, sharing best practices. And as the Confederation of British Industry, we see that as such an important role, looking ahead to COP26 as the host nation, but even beyond that, as we look to events like the G7, what is our role in the world, and how do we make sure resilience continues as we build back better from this pandemic? But looking at the role of finance in particular, it is so critical to building this resilience in the economy. Why? Because when we're looking at investments, it's not just about, the finance itself, it's what is that going into? Is that the technology, the infrastructure, the skills? And currently, all of these things have such an element of the unknown. And finance has the power to invest in the unknown, in these big technologies. And let's be honest, the transition will be costly, and this is for economies across the globe. And the big question that all of us will be faced with is who pays for this transition, whether that's in jobs, whether that needs sort of reskilling, looking at new industries, whether that's also the actual burden, because these new technologies are going to require more money for all of us to put in. So how do we spread that out? But also something that we talk about here in the UK is, what does a just transition look like? It cannot be just those in the upper echelons of society that are making this movement. It has to be something that is all encompassing. And something that we've seen that I know our two countries do share is look at the importance of things such as air quality, for instance, linking that to health outcomes. How do we build this resilience in our economy? So as we all embark on these journeys together, it's clear that information is key. And this is something that really has been driven by businesses here in the UK. So now we've got a lot of reporting requirements. We've had the task force on climate-related financial disclosures, now making it mandatory for any public listed companies now to set out what they are doing on ESG. We're also having this big push now as a country ahead of COP26 for companies to outline their net zero commitments. And as we build up to COP, we have seen so many corporates, so many companies legislating themselves for setting a net zero target. But the key question is, what does this all mean in practice? And over time, what we are doing as a confederation is pooling all of these commitments together, whether that's over a clean energy transition, whether it's looking at clean transport. What about sustainability of products? What is the supply chain? How does that actually ensure that there is ESG met throughout each of these processes? And that's going to take a long time. But actually, the most important part is setting that trajectory off and having a benchmark to work against. And as this information becomes available, then how can the two countries work together to build each other's resilience, but also transform one another as you come onto this journey? And I think there is a real opportunity here between the UK and India. And it's unfortunate that the two countries have been unable to meet due to circumstance at the moment, but we have such a strong investment relationship here. And this is twofold between businesses and government. So the key now is, how can we support one another's economies in this transition, which isn't going to be easy? And the key here when looking at ESG is going to be, how do you actually operationalize sustainable finance principles, whether that's through definitions. As we've heard, a lot of people worried about these being buzzwords, and we need to co-create those. And that's where government and business working together is so important. The value of business in terms of pushing these conversations forwards, and the government coming forward and actually setting the regulatory framework to work within and push those that would not otherwise move in this trajectory. And then finally, looking at purpose, as just said, actually what we've seen here in the UK is now ESG net zero is the #1 issue to talk about in the boardroom. And to date, that's been so difficult to get onto the table, but now it is very much front of mind. It's front of mind for attracting talent, but it's front of mind for attracting that capital. And as more and more companies are held to account by their shareholders, by their people as well, it's going to be all the more important in a global market for companies to be reporting on what they are doing on ESG. Now, we have made leaps and bounds on the E of that definition. We still need to work our way through what S and G means. And it's important that these are co-created for us to be able to measure impact. So just to close, it seems like there is so much to discuss within this topic. It is going to be a bit of a roller coaster ride. But what I would urge everybody on this call is a reminder that we all have a stake in this vision. And as so long as we want to protect our Earth, we all need to rise up to the challenge. It won't be easy, but we all must make sure our voices are heard in this debate.
Thank you, Tanya. That was interesting, and we're going to come back to you definitely, because some of these, the price to pay or the cost to pay as we move to this transition is a very, very interesting point that you've raised. And also, more importantly, is what does good governance or a well-run society or Earth mean to stakeholders who are not, let's say, fortunate enough to even make their ends meet? And this is something that I'll come back to you at a later stage. So can I now request Bala to join in and make his opening remarks, please?
Yeah, thanks, Srinath, for inviting me to be part of this session today, along with other eminent speakers. Very interesting concept, ESG. I think philosophically, once I heard a linear proponent of spirituality. Once he highlighted that how many of us ask in the morning whether the sun has rose today? How many of us ask in the evening whether sunset has happened? The world is becoming mechanical, and everyone becoming, in some sense, their own way of running the things. If somebody has, of course, lived in the village, and somebody has been focusing on his income only to generate out of farming, he does look at many of these things which I think he has to depend on nature. And India, as some of you would know, there are many cultivation land are cultivated only if the rain god blesses. And therefore, there are many lands in India is called a land which looks up to the rain god for it to cultivate. All these things, if you look at it deep dive, is the ESG as a concept. I think now the ESG as a framework definitely has brought in a point of discussions. Otherwise, it is never a point of discussion in any of the forums. And all of us being the financial market, we do look at in our own way of doing things while making investments in various opportunities, and that definitely not paying much attention to the ESG as a concept. The world is now moving towards caring for the earth, the caring for the responsibilities one has to have towards the social impact, the caring for the governance that will make the business model sustainable. But this over the period of many number of years, being in the financial market, I've seen that the many companies who do not care for such things, the sustainability of the business comes under the question mark. There are many companies which I have seen that maybe as the shareholders of the company, the investors of the companies would not have punished for some reason or other. We would not have understood some of the impact that they have on the environment. But gradually over a period of time, all such companies who had a huge negative impact on the environment per se, all of them actually moved out of the business and they are now become defunct. Therefore, this I think has made increasingly being given high importance, while of course looking at the company's performance, keeping in mind ESG as a concept that has become now one of the high area of focus. Second is, all companies of course have got greater responsibility to shareholders only for the return ratios, and given the fact that these return ratios can of course make everyone actually price these companies while making the investment, and accordingly put the future value of these companies. Today, the future existence of such kind of companies also now comes under the question mark if they don't sufficiently care for ESG as a framework. And having been in the market for so many number of years, I've seen the year 2018, 2019, there are many companies who care for the nature, who care for the governance, who care for the social impact, and they suddenly started coming in a greater demand. It's mainly because of the investors are also now gradually taking up the higher responsibility and also the accountability of driving the business of various businesses as to how they should actually stay focused on contributing to the regime of caring for the world, caring for the nature, and therefore what are the steps that they are taking in the capital allocation in each of these aspects so that the business becomes sustainable. And any such kind of companies who are not actually paying so much of attention, and how those companies also no longer be owned, all such things are emerging, keeping this clearly in mind. And also, I think interestingly, we talk about the Earth on Earth Day. Is exactly almost about 1 year, 1 month since the time the COVID came and hit the Earth, the world at large. I think one of the areas where this good amount of discussion started happening about the food grain stocks availability and the availability of the land that can actually grow the lots of food grains. This has now become a big area of discussions globally. It's coming at a time where then sufficient care needs to be given for the nature at large in order to make the economy sustainable and make the livelihood more sustainable, reliable. At the same time, as an economy of the future, one is able to actually contribute to the success of the economy, keeping in mind the change of world. But definitely the nature, if it is taken care in the form of the ESG as a norm, which all of us in the financial market and the entire company who operates in the space, if they're able to provide sufficient attention, then definitely I think the future of the world would also become that much more stronger and efficient. Of course, these needs, as some other speakers mentioned about collective wisdom coming from every angle of the government, bodies like CII, and the social institutions such as yourself, and also the investors at large, to give money only to those people who care for ESG and yet provide shareholders return. All those things I think would be extremely key in building actually the roadmap for the business. In fact, the last few years, all the noise that are coming in really coming on those lines. Just to give you another example, recently when we are doing various investment analysis, we did have a discussion with one of the largest company in India, well run, well governed. At the same time, they do have business interests that need not be necessarily something that's good for the people at large. And such kind of companies even started thinking, knowing very well the business of course cannot be changed beyond a point. The very fact that there is a greater role of realization on such kind of companies as to, since the evolving theme of ESG, in what way they, of course, they have to adapt to the new norms and participate and contribute to whatever little they can contribute, or maybe the better they can contribute around the ESG as an arms, as a result of the simple contribution that increases actually the benefit the large pool of livelihoods of the people, and therefore how they can actually create a shareholders value. The very fact that all such thing is coming in the mind of people, I would assume the way the various policymakers are driving this as a decision, and as a capital allocator, as one of the stakeholders, financial market being participant, also a similar thought process coming in, I would assume ESG as a concept would probably go a long way in making the world change. And definitely, I think is the way one looks at it has to undergo a major change. The way I think that one acts on such findings and then drives the decisions would also make a huge difference. And that's why I think all of us are playing a role. Of course, more role have to be played. And of course, collectively, not just only in India, but globally, there's so much of discussions happening around that. And how do we collectively actually bring in the implementation of such kind of policies without disrupting, and then move gradually into the new model. Therefore, the world at large would become a much more peaceful place to live, keeping in mind the ESG requirement that now has been discussed widely.
Thank you, Bala. I mean, that was interesting, and we're going to come back to you because investments is always an interesting conversation. And in a market like ours, where we are growing the retail investor numbers, and the premium, the ESG premium will always be a question. How is it measured, and how can it be justified? So we'll come back to you at the end of this panel once we go around the panel. Thank you so much. May I now request Shikhar to make his opening remarks, please?
Thank you, Srinath. A very good evening, good afternoon to all the participants. About ESG, first let me let you know that from CII perspective, what we are doing in ESG, and then from the practitioner point of view, some of the examples. Most of the other panelists have already spoken much about whatever was there on my notes. But as CII, we realized that ESG is becoming more and more important from the decision-making point of view. And this year, which was the year that passed by the financial year 2021, despite of the pandemic thing, two things that we did, and this was also the mistake that most of the companies had, was that the financial guys were not speaking to the non-financial guys. And I think what ESG brought into the mainframe was that people have to talk within the companies, within the business model, and so do within various departments within CII, because I represent the technical department, which is more a center of excellence for sustainable development. And then we have the policy thing that we deal with the Ministry of Environment and Forest. But my colleagues in the other departments are dealing with Ministry of Finance. They are discussing with SEBI and all. And we realize that these are the inputs which are cross-cutting, and we have to have a common strength to bring it on to the national level. And when we started working on the corporate governance committee within CII and brought in the concept of ESG as one of the task force and went to SEBI, and I think Mr. Hari Bhakti mentioned about the BRSR, which is the business responsibility and the sustainability reporting, which SEBI has just introduced on March 25th, 2021. So what I'm trying to say over here is that as within CII, we are doing, the financial guys, the financial policy guys have to discuss this with the technical guys and see that how the concept of ESG could be integrated from the governance point of view, because governance part is one of the major issues over here, that how does the board through its committee provide the direction to the people down the line, that how it has to be driven. So that was one initiative that we took within CII, and we found a lot of good discussion points that came, and we could do an integrated approach. Second part, which is all about the reporting, the way you do the disclosures, where most of the ESG related analytics come. Again, we had the same problem there. We have a financial reporting committee, and we have again our center of excellence assisting companies for preparing their sustainability report, their IRs, their SASB requirements, CDP, and other disclosure norms. So again, we sat together, we had the committee for integrated reporting, integrated thinking, and we sort of saw that there are merits in which the business model has to integrate itself, and what Mr. Hari Bhakti mentioned about integrated thinking. That is the core of this complete integration of various matrices that we see from the ESG perspective, that how a combined decision making has to be taken. So this is from CII perspective, that how collectively we are working with the government, with the various stakeholders, try to capture their knowledge through the consultations and presenting the white paper to the government from the policy point of view, and be alert of how the future legislations and future policy decisions are coming from the ESG perspective, which is very important for us and the membership to know about. So that was one thing. Then second is two indicators that worked very well between 2018, 2020, I should say, and largely in 2020, again, pandemic year. We realized that there was some unique thing that happened, that in India we have NSE, the National Stock Exchange. It has the Nifty 50 index, it has the Nifty 100 index, which is there. Similarly, they introduced ESG Index also. So NSE ESG Index of top 100 listed companies. And some of the companies which were on Nifty 100, and when you see their listing on Nifty 100 from market capitalization from 1 to 100, but on the NSE ESG, when you see their ratings, it was quite different. And some ratings, some ranking, I should not say rating, ranking were drastic. And those companies were where it triggered the point that while 2020 was more consumption year from the FMCG and such product things, why the stock is taking a beating? Because many foreign investors started pulling out of those type of stocks which do not fare good on ESG because of the past sins or the past performance. So I think one of the key things for us as learning was that corporate India and the other corporates across the world have to understand that ESG is not only about the futuristic thing that the organizations plan and then start investing into green assets and the thought process of integrated learning and all. But there had been the sense of the past which are into the public domain and would be taken into consideration of past 2 years, 3 years, might be 5 years. And I think that's where I think Srinath was mentioning that companies have to rethink that do we need to be in those businesses where the level of pollution is so high that we have a very low sort of an acceptability with the community, or how had been our previous engagements with the various stakeholders. And the companies which think and act fast would be the futuristic companies. I think if they take time, I think this time of the past sort of performance on ESG and the future model on ESG, and the time that a corporate takes would be the time wherein all this can easily jump into their risk metrics. And that's what the second example was, that many companies, when we start looking at their risk metrics, because as Tanya was mentioning about climate change, the impact of climate change on the business, and there are many non-financial indicators, your responsibility within the supply chain, issues of human rights and all. Still we see in many corporates risk register, we do not see those risks still qualifying not more than at the level of compliance. So I think that's the second learning, that the corporates have to understand that ESG is giving them a lot of opportunity from the point of view of seeing that where the business disruptions could be. And I think in the pandemic year, we learned about how the supply chain disruption took place. So if there was a lockdown, I'm talking of the 2020, if there was a lockdown in one particular state in Karnataka, and I'm running my plant in Haryana, my business disruption is there because I do not have any localized supply chain, which became a problem for me. And similar things came into learning, that you have to look the complete ecosystem, or we say as an enterprise risk management, from the point of view of ESG indicators, and that could come out either from environment issues or social issues, or these are the business issues. Because my learning over here with working in this space for almost 25 years is, the moment we tag them under E and S, I think somewhere we lose out the sort of importance within the governance mechanism. We have to position environment and social from the point of view of its capability to jump into a business disruption, its capability of for the future investments, its capability of degrading your rating or the ranking in the public domain. And I think those are the things which are the new concepts that the corporate India is at least learning, and where CI is sort of assisting that this has become now very important, and the boards have to be very sort of stringent in taking action, because if they miss the time frame, I think that's where the risk part is. Then moving from the practitioner point of view, because as I said that from CI perspective, there are two things. One is the policy part Other is the advisory part that we do from our Center of Excellence, dealing with the industry from the practitioner side and all. And I think one essential thing that we have to understand over here in ESG is that most of the companies are not at the same level. They are at three different levels. As I said, that the companies where the financial guys have totally integrated with the so-called environment and the social part, I think there the results have somewhere started picking up. But where what Srinath mentioned, that if the corporates are thinking that ESG is a good part to talk about and that will open up the investments and all, it might be a very short-term thinking, because they might get some initial sort of investment, but it will not go a long way. Because in my practitioner thing, I have seen that one company which attracted the ESG funds on the pretext of being carbon neutral and coming 2-3 years investing in green assets and all, got the first tranche of investment released by the capital providers. But when they saw that this company's as performance has not improved upon, they just restricted the second tranche and they said that we want the results first. And I think this is how the hard way of learning is, which should not be the way. So my sort of closing remarks would be that yes, ESG has arrived in India. It's almost 5 years, but we need to see that how this contours work perfectly for the corporates, and they use this for their advantage and for the advantage of the society at large and for all the stakeholders. And that's where the country is going to go towards the clean economic development, I should say. So over to you, Srinath.
Thank you, Shikhar. I think some of those, the practitioner hat that you wore and made remarks are fabulous, and I'm going to use those when I come back for the questions now. We've already started receiving some of the questions, and I would like to open it to the panel. Some of these, I just want to make some provocative comments, because I think this is a conversation where if we don't speak openly, it will remain a lingo. It won't become a legislation. It will just be a lingo. So I think one of the hypotheses is we have seen much of corporate world and even corporate India kind of resist the status quo. So if there is a legislation or a regulation to change what they have to change the way they have to behave, there is a huge reluctance. And we have also seen in some of those, including the top listed entities, just a week before the regulation is supposed to kick in, there will be some sudden change of mood and the regulator will delay it by a year. Are we also anticipating ESG conversation around the same lines? I mean, what starts off as a voluntary disclosure could get further delayed, and we can always, what I call the COVID carpet, brush it under the COVID carpet. Is that going to be the scenario? Or are we actually going to see the top 500,000 companies take the lead in saying, let's shape the narrative around ESG, let's make it a better conversation? So I'd like to go to Mr. Haribhakti for the opening.
No, I think this is absolutely real. From my participation in CII's governance committee, from my actual physical interaction with SEBI chairman, from my participation on several large boards in the country, this is real. There is going to be no deferral of this requirement to voluntarily. After all, it's voluntary. They're saying the first top 1,000 companies will do it voluntarily. And I sense that many more than 1,000 will do it. Look at the fantastic things that CII is doing. They have a center for excellence which can support people. Many people in the country have put up their hands to make sure that BRSR will become a reality without too much disruption or too much cost. It'll get integrated with the way that accounting is done. I've been advocating strongly blockchaining accounting and auditing in order to make the 6 capitals come alive through the capture of data sets rather than doing separate and independent data entry, so that you will be able to get a sense of whether you are actually performing your committed duties under the ESG framework, under your net zero commitment. Whether you're doing it, you have to track it. In fact, many of the boards that I sit on, we have now made it a permanent item on every board agenda to report back on sustainability. The whole world wants it. There is no force which is saying, no, let's defer it. Today's conference with Joe Biden actually chaired got China involved, saying that they also are keen. They have made their own commitment to get to net zero for the whole country. India is just about to make that commitment, and we will see India sticking to that commitment. We were the leaders when the UN SDGs came out, the 17 SDGs. India took a huge lead in making sure that they get implemented. And we are back on track, thanks to all the committed efforts being made all around to get back into the leadership role, to make sure the world knows that we are serious about sustainability.
So thank you, sir. Bala, if you wear the investor hat, you invest in large corporates, both on the capital equity side and the debt side. How are you going to look at this, let's say 1 year down the line, in terms of would there be a ESG premium that you would attribute?
Yeah, interestingly, Srinath, in the last 1.5 years, definitely the attention that is being paid toward the ESG framework and every company investment that we all consider have only gone up quite significantly. And I think the way the money managers used to look at moving away from just looking at only your P&L number and balance sheet number, and then look at only the return ratios, and then the base of which, with the historical way of investing, which all the money managers are used to it. But one other question which now comes actually is that if you're not aligned to the ESG framework, the question of sustainability, or rather the firm remaining in the future, itself comes into the question mark. So therefore, the survival of the business would also largely depend upon how well you are able to adapt to the ESG framework and go with the world policymakers, the drive towards their contribution to the keep the environment safe and other social impact that they're able to contribute. But the incentive can come from two ways. Once the government of India gives the incentives, maybe every government gives an incentive. All of us know there is a carbon emission incentive was given, where the less carbon emissions, you get a credit, and therefore they incentivize the companies, therefore they encourage companies actually to adapt to the lesser carbon emissions. The same way from money managers' point of view, definitely the multiples that you provide for such kind of highly governed companies can definitely be higher. So that's where I think the market now started evolving. I would assume it's just a beginning that has happened the last few years. In my opening remark, I also mentioned about a few companies which are supposed to be great companies, but do not have sufficient ESG score. They already started going in their minds of the board, as well as the key management people, as to how do I actually change my business model to remain relevant in the future, taking into account the ESG related framework, at the same time create the shareholders value. Therefore, the cash alone, generating cash profit alone is sufficient, or should I generate cash profit at the same time can actually add value to the shareholders? That has now become one of the key focus discussion. From money managers' point of view, there's another area where SEBI has done a great work, and all of us are also responsible. The proxy voting. I think we exercise the proxy voting today, and whichever the companies, of course, generate a lot of profits, but not focusing enough on ESG framework. There is a consideration also now goes into in taking the final decision of proxy voting. So all such things, in my view, is just a beginning of creating a greater future. Maybe as you move forward, such activism would only increase in order to exercise the right and power that you get as an investor. Ask these related questions actually the companies from a sustenance point of view, from future survival point of view, both for the company as well as the shareholders, as well as for their own contribution to the economy at large.
Sure. Thanks, Bala. In that, just another question. How do we simplify the communication around ESG to our retail investors? I mean, if you look at the business publications the last few months, even if a company raises, let's say, as little as $5 million debt on from a ESG fund, it becomes front page news, which is a good thing from the media perspective. But the company, whether they actually have all those practices, nothing. I mean, people just get carried away by that hype. So how do you, let's say, simplify the ESG conversation for retail investors?
See, one other thing which, of course, has emerged, see, the communication, however you make the communication as a fund house, as a money manager, would only reach so much. But it has reached the large the system as a whole. I think some of the activism, I think what you're referring to recently has been, of course, in the social medium and talking about such the voice that has been raised, then naturally, of course, has an impact on stock price, and therefore it has an impact on future survival of such kind of companies. I think one of the area where I would assume, I think the greater communication and good can be done by launching funds which actually invest in ESG as a concept. Even the money managers, when we start actually highlighting that I invest only on those companies who are ESG compliant and certain scores. Of course, the scores can always be, nobody will be perfect. And there will be some companies will be borderline cases. One has to make such kind of exceptions in the whole model. But having done that, I think once you start communicating that very clearly as a money managers, what are the parameters you look at while looking at investing in various companies? Not just only the return ratio, which I mentioned about earlier, even the practices they bring in the interest of the economy at large, also pay attention, the form of management scorecard, on the basis of which we consider investments in various companies. And that's something in the worldwide. Money managers already started doing that. There are many firms who completely ignore valuations over ESG score. And that's, I think, a new model which is emerging, and which essentially means that more and more such fund launches, and as such fund launches happens, more communication happens. And such kind of communication, in my view, would also make the retail investors realize, so going only chasing profit, chasing return is the right way to do things. Of course, chase both, but take into account some kind of filtering process, taking into account the ESG score, etc. So this is something I think now becoming part of the communication as part of the investment style. I would assume in the next 4 or 5 years, we'll gain more and more momentum, and they'll become the new norm of the next maybe a decade, completely moving away from the norms that all of us set in the historical standard of evaluating companies.
Thank you. I think profits with a purpose, if I can say so. I think it's going to go back to our basic values. So I just want to bring Tanya here from the UK experience of what kind of frameworks did UK put across for evaluating investments, and what kind of public policy initiatives happen, because they're a little higher up the curve, and it could be interesting to see can we bring in some learnings to our market.
Thank you, and so much to reflect on from colleagues' comments, especially looking at that push from corporates. Just one bit to comment on is the importance of obviously foreign direct investment is looking at this criteria. And here in the UK now, the government, since legislating for a net zero target across all of its investments, are now sort of embedding net zero criteria. The Chancellor, the Treasury, the department that's responsible for government financing is due to bring out a report on what does effective net zero investments look like from a government perspective. And then I also mentioned the climate financial disclosure reporting requirements that are also coming through, and that is now going to be mandated from 2025. All of those sort of publicly listed companies will have to adhere to that. So the movement now is actually, it's become a very competitive environment. Actually, businesses are competing with one another to say who has the most ambitious net zero target, who has the most ambitious ESG criteria, sustainability criteria, and that in itself is actually promoting a ranking table between businesses. And as a result, those laggards are getting left behind. And as we all know, no one actually wants to be at the bottom of any table. And that's what's actually driving in innovation, competition. Now, whether that's within the UK, but also internationally. And when we just spoke about, the first question around the importance of the big corporates, I cannot mention enough that actually it is so important for them to be on board. So look at the major oil and gas companies globally across the world. It has been so important for them to be part of this transition. And whilst government frameworks have been really important to actually create what is, a level playing field as well, that profits with a purpose. And how do you generate this market where actually innovation, the free market wasn't naturally going to go there? Why? Because also, the externalities are not being effectively priced. That's when you need government intervention to come in to assess the market and say, listen, these are the mechanisms that need to be implemented. So there is a real balance there. Obviously, not all of it is going to be incurred with a cost as well. And that's where we need to look at profits in a slightly different way. profit can be very positive, especially if it's regenerative and it's going into actually looking at these bigger investment projects, whether it's in solar, whether it's in electric vehicle infrastructure charging. These are all sort of big national priorities for nations across the world. So that's why I think the frameworks become so important. And we have to remember this is a pretty systemic change, right? We're looking at an energy transition where previously everything was in silos. You're talking about now getting your energy for, for the home, but also being able to utilize that for transport. This is completely revolutionary and it will require new frameworks. But what we all need to make sure that these policies are being made in integration with one another. So once again, businesses need to be part of those conversations. I've been working with colleagues at the CII as well to actually share those best practice learnings, especially across geographies as well. And something that we've traded insights on between the UK and India is looking at the community base. We might have it on a smaller scale, but really understanding the geographies and what their requirements are for tailored solutions are going to be so important for actually underpinning progress and actually reaching those when hopefully it does get announced for India some sort of net zero target.
Thanks, Tanya. So you work closely and you've been involved in this entire COP26 preparation, and it'll be very interesting to ask your views on that. What has been it like? And two, a little critical, let's say a critique on this. The world generally looks at all these events where the political leadership comes together. Is it just another event, or does it really drive commitment? And how does that commitment cascade downward into each of those economies picking those themes?
Yes, definitely. So it's obviously been quite a turbulent time trying to host an international event whilst the pandemic is still going on, and it's still to be confirmed what the nature of COP26 will look like. But obviously it's such an important moment in these discussions, given the fact that climate change has really accelerated in prominence over the last few years. And I think looking at the pandemic and having been involved greatly in the UK's pandemic response, there is so much to learn from one crisis to the next, and looking at how the world has come together as well in response to the pandemic and what lessons we can take to that. And the UK really sees itself as a global leader in this space and wants to use it as a moment to unite everybody. But also it has been a very fragile moment to remember actually our vulnerability as human beings, talking about, Earth Day, that there is so much that is out of our control. But obviously that any impact of a crisis, as I mentioned before as well, the burden is placed unevenly across economies, and we have a duty as the UK to also help other economies on this journey. So the principles for COP26 are based around sort of 4 key areas. One, looking at the energy transition. Secondly, looking at clean transport. Third, the importance of green finance. And fourth, nature and biodiversity. So across all of these, the UK really wants to garner, where we can collaborate as economies, but also it's a really important time for businesses, as I mentioned. So whilst there are obviously a lot of trade talks that will be taking place, revisiting all of the countries' commitments to the Paris Climate Change Agreement, that's one of the most important aspects of this COP26, to revisit those. And for those listening on the call, those NDCs, as you've seen from the UK and the US coming out today on setting out those ambitions, that actually to reach the Paris climate change commitments, we have to be more ambitious. And we need to drive that forward to set the example. So it will be a really momentous moment for us. But the challenge that we are finding as economies now is it's great to set targets, wonderful. Same with criteria. But as colleagues have mentioned, who is accountable? How do you measure these? And this is now the transition process that we'll be going through in the UK and the US. That warm words are great, but now we actually need to deliver that and the delivery process, it is going to be slightly painful, but hopefully we can set an example as to how we make that progress.
Thanks, Tanya. So we've started receiving quite a few of our questions from our audience. And let me start this time with a very broad statement, and then there are some very specific micro questions as well. We'll go with each of them. So India has almost 1/6 of the global population, and we have huge disparities between the haves and have-nots, and right from whether it is a different stakeholder, there are disparities, disagreements, and different voices. And the point about ESG is, especially in the background of COVID, when the economy will bounce back over the next few years, what are the lessons for, three kinds of capital? One, plain capital. It's not infinite globally. It's a finite set of capital. And then we have huge human capital in abundance in India. And the third one is social capital. As a society, we've always had social capital, and we've deployed it, and we probably have not advertised about it. So how do we integrate capital, human capital, and social capital, and then create a sense of mission ESG that will resonate in all the voices, so that it's not just only the corporate Indian voice, but also it could be a student, it could be anybody saying, hey, it's mission ESG, and let's go get it. So I want to start off this with Mr. Hari Bhakti, and then we'll go to Shikhar for this.
What a fantastic set of statements you've made, Srinath. Very impressive. Let me put it this way. There is really abundant capital in the world. There has never been a time in the history of the world when this much capital has been made available simply because it was felt that the only way to combat the pandemic was to print more money. And this has happened at a scale that is unprecedented. What is important now is to make sure that those resources get allocated. First, you need to create the attractiveness in your company through your business models, what you wish to do. How do you wish to achieve the 4 pillars of COP26, for example? You could set your goals around very specific objectives now and do the capital allocation. So capital is abundant, it will come in. India has always had a very benign outlook in terms of exercising its soft power, and India will continue to do that. Again, I must say from personal experience that the emphasis that is now put on safe working conditions is unprecedented. If I were to compare what I used to see on boards 3 years ago with what I'm seeing today, it's unbelievable. The definition of what should be kept safe has been expanded so dramatically. We often think not only of contract labor, which comes to work in our factories at some point in time, but we also think of the transporters who bring raw material into our factories and take our finished goods away. And we extend our safety carpet or coverage to all of them. And this is an absolutely new situation. Also look at the response that India had to COVID. We did not have the ability to print all that money that the rest of the world did. So what did we do? We decided to lighten up our inventory of food. So the food corporations' godowns were utilized to make sure that people got food to eat. And the outpouring of goodwill through CSR, through people donating, through people sacrificing months of salary, an amazing outpouring happened. I was watching it as a board member of Give India, and I was stunned by the generosity that was suddenly visible and how much people cared to make sure that the money actually reached the needy. I know Bala works very closely in so many such situations, and I'm sure Bala will agree that we saw an outpouring of this goodwill and generosity over the last year. And finally, on making sure that we distribute the benefits of whatever we create now. I know that India will at some point in time become the fastest growing economy in the world. very soon, and sometimes soon. And when that happens, I'm also of the firm belief that we will find ways to make sure that this wealth is distributed using the ESG principles that we have learned during the last 2 years of very, very tough situation. And we will be able to come out showing that we can care for our people, we can transition, we can meet challenges, and we can lead the world. That's my firm belief.
Shikhar, if you were to come in,
Yeah.
what is it that you've seen from here?
One thing means, of course, what Sir Hari Bhakti is saying, nothing further to add on this, but it's a huge opportunity for India, I should see, because the way we are expanding, and I think there are three examples I will give that how the ESG is going to be important for all type of population, I should say, from the demographic dividend point of view. One is you have seen in India the consumerism which is coming up. You have seen this star rating products which is there. So today, if you ask the young millennial that whether you want to buy a product which is 2-star rated or a 5-star rated, they will not look at the money because anyhow they are going to get it into an EMI mode and get it financed. So a mere difference of 3,000. So today that decision making by default is going towards a more energy efficient sort of a white good, and the same transformation will come when the electrical vehicle and the infrastructure will get developed, that the millennial is not going to see the mistakes and all, it is just going to jump on from their perspective. They feel that this is the correct way of doing the things. Second important part we are seeing in India is that how the legislations are moving. There is a strong push factor that has come from Ministry of Environment on something called as extended producer responsibility. Extended producer responsibility means you will have to see that it should not be that people have consumed the food, the packaging and the PET bottles and all, and then they throw it and then it's the municipality to take care of that, and where it gets dumps into the sea, ocean, landfill, we are not aware of that. So there is a huge responsibility that corporate India is now looking that while we are designing the product, we have to design a product in a closed loop manner. So there is a lot of intellectual capital which is coming up over here, and India has to produce those business models because we have the 1/6 of the population of the world, but we only have 2.5% of the land area. That's the challenge that we have. So obviously these type of things are coming up where the companies are now realizing that rather than a linear economy, we have to go into a circular economy perspective, which is again a pillar of ESG, which is there. And I'm seeing that change happening because the maturity of discussions during last 1 or 2 years that I have seen that the corporate India have reflected. What is happening is the future business models are becoming more as solution providers. They don't want to be seen as problem creators that, okay, I have done the emission, now I don't know, I am in compliance now, let society deal with it. No. So that's more responsible across the value chain perspective that is coming, that if I am polluting, I have to also create a cleaner air initiatives and things like that. So that's one thing that is coming up. And for the startups, because there is a lot of startups which are also acquiring the ESG funds. So I just want to give an example of Zomato, means nothing to have any favor for that, but just because I also heard this example that while they were raising the capital, and the ESG guys were struggling that what could Zomato do from the business model point of view, they realized that the startups can have various touch points. Touch points meaning is that their guys are reaching to almost all the restaurants, kitchens and all. And they thought that in the interest of the public, let's start oil, the vegetable oil, the oil that is used for cooking, which could be of different various quality and all. So it gave Zomato a sort of a feeling that within their business model, they will be also rating the restaurants based on the which type of cooking oil they are using and how the recycling of the oil has to be done. So they started a facility of collecting that used oil and then converting it into something more valuable and going into the soap manufacturers and things like that. So what I'm trying to say is that for the startups also, if the investors sort of challenge it, there are examples which are coming in. So in a way, I think the human capital that we are talking of, we have to reskill our human capital also to these type of examples so that we don't create them on the previous models. We try to create more green jobs, green growths. And from the social capital view that you asked, Srinath, I think one important thing, which I think Mr. Hari Bhakti touched, was that India is at a spot where today world is looking to us from the SDGs point of view, or ratifying the Paris Agreement and all. And I think one good thing that all the ESG guys should do in India is that also in their ratings and schemes should link it to the SDGs, the Indian SDGs. Don't get confused by the SDGs that we have committed globally, but then there are Indian specific goals and targets that Niti Aayog has made, and they have done a good by doing an ESG index at the state. So as a company, I am now responsible to connect to that SDG and say that while I am doing the business, my state, my geography's SDG index is also improving, because that's what my responsibility is. So that's the sense of comparability that will bring along. And I think in SDG, the goal 17 is the most important, the partnership. If I'm able to show some sustainable partnerships, I think that will boost up a lot of confidence into the investors community, and not only investors, but it's a goodwill that I enjoy from the point of view of even the retail investors. Means my sort of an understanding on this subject matter, and when I heard about Zomato, comparative to any other delivery guy, improved. I said that good, at least this guy has created one solution. Similarly, if I hear that, okay, this company is doing good in extended producer responsibility, the mindset change will become a very important decision maker.
Thanks, Shikhar. That was very, very insightful. I mean, the example that you gave and the various attributes that you covered, I mean, brilliant. And there's a question specifically targeted at you, Shikhar, from Abhishek Singh, who's asked, how is CII assisting Indian corporates to focus on ESG investments? At the same time, how is CII ensuring that there will be adequate sweeteners from government India to ensure participation?
See, one thing, I think ESG investments, CII has not to do much because it has already arrived. So the corporates are already attracting to those funds. But I take it as a lead from what you said, Srinath, that let's not look ESG only as a investment sort of a vehicle. Let's try to see ESG as a game changer for India for investing in future technology. So my sort of guidance as CII to all our members which are attracting ESG funds, ESG ratings, is that utilize this money for making the business model futuristic. Yes, let's develop those models where we can compete with the world, because one thing that India has not gained enough advantage, and today we are at that advantage from ESG funds, is that we do not have the patents, we do not have the technology and all. And that's why in the complete climate debate till last 20 years, every time that we talk to the developed world for climate finance and funding the technology, we are said that, okay, we will be charging you the IPs. And those IPs will make my business model so horrific that I will not earn anything out of it. So I think let's use ESG funds for developing future technologies. What saves India in filing the patents and all. So I think that's what I will feel from the ESG perspective we should be doing. And the government supporting, I think never there is such a sweet spot with the government. Means the pandemic brought that relationship more closer. We have the DPIIT now. Let me tell you, within Ministry of this Commerce and Industry, and there is something called as ease of doing business. But in ease of doing business, one thing that they have clarified very much is that ease of doing business does not mean relaxation of the environmental or social norms of business. So you invest, you create solutions, and they are coming with those schemes. So I think government is only an enabler providing an ecosystem. We don't need much funding from government, I should say, because the funds are coming from the ESG at a very lower rate of interest. So we just need government as an enabler for just driving it and showcasing these type of things to the world.
Thanks, Shikhar. So I want to ask a similar question on the aspect of financing to Bala. This is a question from our strategic partner, KPMG. The partner there, Santosh Jairam, has asked this question. Are there separate funds focusing on ESG, or is it ESG across board? Which means that are funds chasing only for a specific project or initiative within the larger corporate? What's your view? And then I want to ask Mr. Haribhakti this question.
I think interesting question, Srinath. While I think his question is very right, because all of us as a money managers runs funds which have been having a track record investing across the market without paying much attention to ESG and other aspects of running the business, purely driven by balance sheet and P&L numbers and so on and so forth. So definitely in the last 2-3 years, the mindset of course is changing completely. While we do have funds which focus only on ESG, but as a principle, investment philosophy itself now is being rewritten. The investment philosophy, there were probably in the few years back, there would not have been any mention about ESG score or management scorecard on the basis of the ESG governance is the companies are adopting. But naturally, in the last few years, definitely that score, of course, is now becoming prominent in every investment decisions, even in the existing funds. We also now started paying attention that how to differentiate companies who are completely ESG compliant, companies, but on the path of getting ESG compliant, then actually you need to, of course, differentiate and how you actually treat each one of them. And that's something is a premium, that premium valuation that we give, or maybe a premium importance that we give for companies who have got a better governance. Also now becoming actually one of the thought process money managers worldwide, and even including the domestic money managers, is now becoming one of the thought process. Whichever companies are not well governed in all these 3 parameters, despite the companies may be doing well, and today you will find a greater under ownership of such kind of companies. Even in those funds, it not necessarily have to be compliant with ESG from a regulatory framework point of view, because these are all launched actually way back, say about 2 decades back or 1 decade back. But the very fact that ESG now becoming the norm of investing, it is now not just getting restricted as part of the approach only to the ESG specific funds, now it's being applied across all funds. Even in the question of debt funding, when we do a debt funding, of course, equity is easy to actually identify this kind of ESG score. But in the debt funding, also when you look at the debt funding is one which, of course, naturally the money that is being lent is purely goes towards building the capital allocation to various borrowing from various purposes for their borrowing. Naturally, the attention is being paid on such borrowing, actually how the utilization of the money is also being used for the purpose of creating value for the company, taking into account the ESG related impact that could have. So this is now becoming a normal way of investing rather than just restricting yourself only to those specific mandate. Those specific mandate, in fact, if you have to say, is still very insignificant proportion of the overall assets under management. But that doesn't mean actually one has to ignore the ESG as a concept. Now that is now becoming the culture and part of the practice of the money managers, not just only in India, even across the world.
Thanks, Bala. Mr. Haribhakti, your views on this?
Well, my views are very similar to Bala's views, but I go one step forward. This whole fad of ESG funds will disappear very soon. Every investment will have to be on the touchstone of ESG. I'll give you a very striking example. We raised some green bonds of significant sum, 100 million US. And when we were about to get the disbursement, we were asked whether we are ESG compliant. Fortunately, at the holding company level, we were. But then they asked us another question. The investments or the lending that you're going to do is also going to be to ESG compliant companies. And there we said, please give us 2 or 3 years to be in compliance. So that's where the rub is going to lie. And therefore, I'm very happy that Tanya talked about green financing as one of the major parts of COP26. Tanya, that's going to be very significant influencer. And I can see that this whole fad is just a fad. Every investment, every commitment of capital has to be based on ESG.
Thank you. So I'll go to the last question while we have still lots more. The last question, which I think is very, very relevant, this is a question from Anna, who's asked that it's very clear that current practice on ESG, both in UK and India, is nowhere near what's needed to be done in terms of action. So how do we get there? And commitments are one thing, but actually having it as an agenda to execute those projects, especially to have transformative action, is another one. So what will it take to actually catalyze a genuine step change?
Thank you. It's a very interesting question, and as I mentioned before, it's government regulation and policy frameworks for us that is absolutely driving the change. There is no two ways about it, and a lot of companies have to now get with the agenda, because they will be otherwise put at the bottom of that league table, and very quickly funding will come out of that. Consumers also have a really powerful voice as well in terms of determining, how well a company performs. So in terms of turning the warm words into delivery and action, that is one part of it. And it's also the businesses themselves, the business community. So looking at your supply chains, as I've mentioned before, that actually everyone, as Shailesh just explained, that actually it's no longer a buzzword. It is just going to become business as usual. And as a result of that, you will quickly see this dissemination come through. So I have real confidence for us in the UK. That's what's going to drive it. Internationally, that's another question. How do you actually decouple yourself from business as usual, as you have done in the past? Bringing on new business models, new way of doing things, not seeing it as a threat. This is an opportunity to all sort of reinvent ourselves, move forward. We're talking about the protection of our planet Earth, and in some extents, yes, some of that capital is limited. There are finite resources, scarce resources in this planet, and now we need to look at a more efficient way, better way of using those resources. So that's the challenge that I give to looking at other international counterparts, that how do you actually look at this as an opportunity to move forward for the next generation as well, to stand up, voice your opinions, because this will be impacting us. It will be us that will have to live with these changes, be part of this new jobs revolution as well. And actually, if you want to move with it, instead of things happening to you, be part of it and create the architecture. And that's why for us, as part of the Confederation of British Industry, that's why businesses are so invested in this. Why have things be clamped on you when you can actually create the narrative for yourselves?
Thank you, Tanya. I mean, it's been a delightful conversation, and I think time has been well invested in. And I've just been reminded by our host that I cannot speak till cows come home, or rather until COP26 comes home. So I'll now turn it over to Lakshmi. Lakshmi, over to you.
Thank you, Srinath. Obviously, one wanted to carry on listening to the conversation. It's so, detailed. Everybody wants to know a lot of things. We had many questions, and I'm going to try and send those over to the MyyTake team and to the panelists so that we can actually have them responded to. But I mean, today was going to be a conversation starter, and I'm delighted that we've all participated in it and made sure that the very innocent question, Shaileshji, that my niece asked this morning when I go and pick her up from school this afternoon, I will be able to tell her something more than what I knew. So thank you so much. It's been a pleasure to have you all speak here. For all the audience to be so engaged and listening in. I've had multiple queries actively on the email asking how we can take this conversation forward and how people can, collaborate and take this beyond just a webinar and make sure that we deliver this in our companies and during our corporate sort of, delivery sort of work plans. So thank you very much. I will invite Shagufta from the MyyTake team to tell us what are the next steps. We've all talked about things that we've learned, things that we've done, but one does go away from webinars and sessions wondering, well, what has been the biggest takeaway? Yes, I've learned something new, I've learned something more, but what can I do as a corporate, as an individual, as an organization? So over to you, Shagufta, and many thanks on behalf of Confederation of Indian Industry and MyyTake to all of you. Shagufta, final words for you. Thank you.
Hello, everybody. This was a very enlightening session and also a hopeful one. Hope for a sustainable and equitable future. I mean, it's so heartening to see people from all across the globe investing their time and resources to forge a better path. As Mr. Haribhakti said, each one of us has to redeem our promise of the license to be alive, do our bit to make a better place. And with ESG becoming increasingly the new norm, as Mr. Bala put it, it's changing how we've historically evaluated companies. And as Shikhar also said, that it needs an integrated approach. Finance, non-finance, all stakeholders need to work collectively. Thank you to our esteemed panelists for taking out the time and sharing your insights with us. And we will continue to seek your support and guidance as we venture along. A big thank you to our partner CII, who are equally passionate and committed to collective action. Lakshmi, we're very excited to be working with an ESG champion like you. And as you said, it's about surviving together. Thank you, Srinath, for guiding the discussion and mentoring MyyTake. We started MyyTake with a simple purpose, to enable goodness as a way of life. And all of us are driven by the passion to create tangible impact. ESG is the foundation on which we can build businesses whose profits are centered in doing good. And in addition to industry-led conversations like this, a key part of the ecosystem would be bringing digitally young users to engage and inform them about how their actions affect the planet and how they can make goodness part of their everyday lives. Because as Tanya said, we vote by what we spend in our purse. So that's what we're doing at MyyTake, creating content and tech products that will connect the two aspects, demand and supply of a better world. So going forward, we will be working, with all of you and with media and organizations, for-profits, corporates, to sort of take this narrative further. And we would love to connect with like-minded individuals and organizations and explore meaningful partnerships. So please, everyone, feel free to reach out to us. So yeah, that's it from me. Thank you and stay safe, everyone.